This is not the most fun topic in the world. I realize that. But today, because I know that tough love is important and these are things that you need to know and look out for, what we're going to be talking about in this video is the top 3 signs that any trader will fail and not be profitable. You see, any problem that you have in your trading is going to break down into 3 very simple categories. You either have a problem with your strategy, meaning you're trading a strategy that does not make money over time, or you're not trading a rules-based strategy, so therefore you're constantly switching strategies or being confused about when you're actually supposed to place trades. You have too much subjectivity. All of that would fall into the category of being a strategy issue, and that is category number 1. Category number 2, that any trader that wants to be profitable must master, and that anyone that pushes aside will fail at trading, is risk management. In this case, maybe you have a strategy that proves to make money over time. You put in the work on the strategy, but your risk management's bad, and for that reason, you're consistently becoming too emotional while in trades. You're moving your stop loss, taking targets off early. You're incapable of sticking to your plan because you're risking too much, or even worse than that, you're risking so much that you blow an account before you give your strategy time to actually make money. Those things would fall under the category of a risk management problem, or you have a discipline problem where the other 2 are set, but for some reason you're either too greedy or impatient, or something is wrong in the discipline area where you cannot stay disciplined to a risk management plan that keeps you out of your emotions and keeps you from blowing your account, and you can't stay disciplined to a strategy that gives you an edge over the market. Those are the only 3 categories that you can actually have a problem in. There's no other area of trading as a technical trader. So right now, just understand that the top 3 signs of any trader that will fail is the fact that they either have a strategy problem, a risk management problem, or a discipline problem. And the reason I break it down into those 3 categories and as simple as possible is because it just makes it so much more easy to understand and kind of dissect what you're doing wrong if you're not quite making profit. So now what I want to do is jump over to the whiteboard and discuss all 3 of these areas and what you can do to solve the issues you're having in those areas. So I do this through something I call the triangle of trading success, which you may have heard of before. I'm going to draw that out. Yo, before we keep going, I just wanted to jump in here real quick and say if you're enjoying this content, we come out with content like this each and every week. So do me a favor, go ahead and click that subscribe button down below the video if you're not already. If you already are, awesome. Thank you very much. Click that like button for me and we're going to jump back in. See you guys there. This is an example of the triangle of trading success. Let's make it a little bigger. And this triangle of trading success, in the middle of it are all the traders that are currently profitable and where you want to be. In order to get there, you must first master a strategy that is rules-based, that you can actually follow, that's not subjective, and we call that an objective strategy. You must master a strategy that not only is objective, but also actually makes money. The way I create strategies like this is something I call CEST. C-E-S-T. This stands for conditions, entries, stops, and targets. If you have solid rules for all 4 of these things, the entire CEST analogy, if you have rules for all 4 of those, rules for your conditions, rules for an entry every time you place a trade, rules for where your stops go every time you place a trade, and rules for how you take targets every time you place a trade, they can be variable rules. They don't always have to be set. It doesn't always have to be a 20 pip stop loss. It doesn't always have to be a 1-to-1 reward to risk. You can be dynamic. You can use structure as targets, things like that. But you need to have rules for how you're going to do that. And you need to stay consistent with those rules, whether they are dynamic rules or set in stone. Every single time I place a trade, this is how I set stops and targets. But if you have a strategy that is made through conditions, entries, stops, and targets with easy to follow rules, and that also gives you an edge over the market, then you have strategy good to go. And you're set and ready to go with that. Now, the second question I get all the time is, Steven, how do I know that it makes money over time? Well, we don't have a crystal ball, so there's literally no way for us to know for an absolute fact that anything will make money in the future. But what we can do is something called backtesting. So instead of going, it's definitely 100% going to make money, no way we can do that, but we can give ourselves the best likelihood of making money by trading something that's made money in historic data. So if you have that CST set up, then after you have that CST, you should be able to go through historic data on a chart and do something called backtest. Throughout this backtest, what you want to do is look at least the previous 100 times that the exact rules you have made up through the process of CEST happened on a single currency pair and time frame. So every currency pair and time frame you would like to test it 100 times on that pair and on that time frame. For instance, if I had CEST, a full strategy made up with CEST on the euro dollar, and I wanted to see if it was profitable on the daily 4-hour, 1 hour, and 15-minute chart, I would test that exact strategy 100 times on the daily euro dollar, on the 4-hour euro dollar 100 times, on the 1 hour euro dollar 100 times, and on the 15-minute euro dollar 100 times. So it's always going to be, at least for me in my personal confidence level, I need to see 100 instances of that strategy playing out, that rules-based objective strategy playing out and giving me a profit before I can add that pair to my portfolio. Because the reason we're doing this is because with any given strategy, it's going to work better on some pairs than others because different currency pairs have different personalities. So the reason we do all this backtesting, not only does it build up confidence and help us with discipline, not only does it give us an idea of what may be a good risk management plan for a strategy like this, because we can tell out of historic data how many losses in a row did it have, how much of a maximum drawdown did it have, not even just losses in a row. How many wins did it have in a row? You just gather so much information. So you get confidence, you get a ton of information. It's almost like if you're starting a business, then you're going to do product research before you start mass producing a product. Any big business has done this. The product research part is them testing that product on a small sample size. For us, we're testing our strategy on a 100-time sample size to do our product research in order to see if it's something that may work in the future. And that's what we're doing while we're backtesting. So as long as we have that done, then the strategy portion of this is over. If you are currently feeling like you have a strategy problem, then that is how you fix it. If you're currently having a strategy problem where you are confused when you try to place a trade, where you are constantly switching strategies, any of the things that we listed that were going to be strategy problems. If you feel like your problem is with a strategy, then create a strategy or learn one that has solid and easy to follow conditions, entries, stops, and targets. Then take that rules-based strategy, write every one of those rules down, write down all of your conditions, your entry reasons, whether you have one or multiple, write down your stop placement and your target placement based on all of that information, go through historic data 100 times, per pair and time frame you want to test that on, pick out the best pairs that worked, and then your strategy problem will be completely solved. You'll be good to go in terms of strategy. Now, what was the next problem? The second thing that if a trader has it, it's impossible for them to be profitable. It's impossible for them to make money as a trader. The second thing is risk management. Now, you hear a number floating around all the time that never risk more than 2% per trade. But the thing is, that's not correct or incorrect. I'm not saying it's wrong. I'm not saying it's right, because it can't be either of those things, considering that risk management is such a personal decision. My risk tolerance, for instance, I may be a super risk averse person, meaning that I don't like risk that much, and risking 2% of my total account value every time I place a trade may be terrible for me emotionally and psychologically. I almost skipped over that word. It may be terrible for my emotions to risk a full 2% per trade. So therefore, I made it to reduce that to 0.5% per trade or even 1% per trade. I may be a person that's very willing to take risk, the opposite of risk averse, and I may want to risk more than 2%. And in that case, I would have a bigger ROI at the end of the year as long as my strategy, again, made money and was a decent strategy. So this risk management portion is just something you need to ask yourself in terms of, are you comfortable risking and losing blank amount of money per trade? Because as I talked about this in the last video, actually I did, most strategies, most professional traders, most traders in general win about 50% of the time. So if you're going to be winning and losing 50% of your trades, you need to think about that as in how much money are you willing to lose when you're flipping a quarter. Now, 50%, let's say you have a strategy that's really good, 50% accurate with a 2-to-1 reward to risk. Really good strategy. But even with this being the case, you're still losing half of those trades. So what you need to think about during risk management is how much are you willing to lose on each of those trades. And this, again, is one of the reasons we back test to see what the probabilities are with a given strategy that we have blank amount of losses in a row. If it's 5 losses in a row and you're risking 2%, 5 times that 2% means a 10% drawdown. Are you okay with that? These are questions you have to ask yourself in terms of risk management. And that's something, again, that you need to focus on. And right now, if you're having a risk management issue, then it's because you're risking too much of your capital or because you don't have a strategy you can stick to, and that's causing you to get emotional. So first, focus on your strategy. Make sure you have a rules-based strategy that you've tested and seen as profitable through historic data. Then make sure that your risk management plan keeps you comfortable, keeps you out of your emotions, and by far, most importantly, keeps you from just completely blowing your account before your strategy has an ability to even create the edge that you gain from the strategy. And what I mean by that, just to go on a short rant here, is that you may have a strategy that's 50% accurate with a 2-to-1 risk reward. And with that being the case, that strategy is really likely to lose. There's like a 50% chance with those numbers. Just trust me on my math here. With those numbers, there's a really good chance you lose 10 trades in a row. It's about a 50% chance you lose 10 trades in a row. So if you have a 50% chance of losing, big L here, 10 trades in a row, and you're someone that doesn't have good risk management, and you're risking 10% per trade, and you end up losing those 10 trades in a row, what happens? You no longer have an account. Your strategy was profitable. If you win 50% of your trades out of 100 and you win them at a 2-to-1 reward to risk ratio, you will be profitable at the end of those trades. But if you happen to have a situation where you lose 10 trades in a row and you're risking 10% per trade, you will blow your account before that edge, before that advantage can even play out. So that's another really important part of risk management. Thirdly, what's the third type of problem we could have? Well, maybe we have our risk management in check. Maybe we have our strategy good to go, but maybe you're having an issue with discipline, which would mean that you are constantly switching strategies. You're constantly impatient and greedy, and you're placing trades not based on your strategy, not based on your risk management plan, but based on what, I like using this because it's not real, but it just sounds funny, based on what the Pip Unicorn said on some Telegram channel, and based on GameStop was at $300, now it should go back up, right? You're trading not based on a trading plan, but based on hype and greed and emotion, and that's discipline. And the only thing you can do to avoid that is be smart with your money. Be smart. Every market there is not there to give you money. Every market out there, stock market, Forex, options, futures, does not matter. It is not there to give you money. It's there to take your money. And unless you trade smart, then it will take your money. And just jumping in on trends, as attractive as it looks, when other people have already jumped in on those trends, chances are you're going to end up getting in those trends too late. And like a shitload of people that lost money on GameStop and things like that, like lost money on Bitcoin before it started going back up after it hit that 20K and dropped all the way back down to like 3. Like those kind of people, chances are that's the person you're going to end up being. You're going to end up being the guy that gets in a little bit too late, because there's a lot more of those people than there were the people that actually wrote it up and called it the money. And if you want to go gamble with your money, this is something I will say. If you're here to gamble and try to make trading a get-rich-quick scheme and you don't care about the money that's in your account, then do what you want. I mean, that'd be like me being mad at somebody for going to Vegas and blowing 10 grand. If that's their muse and what they like to do, who am I to say it's wrong? If that's your muse and you're here just to place trades on hype and place trades out of greed, that's called gambling. But as long as you do it with money that you can afford to lose, totally up to you. Do what you want to with your money. It's not up to me whatsoever. But if you want to create a career out of trading, then that's the path I'm trying to show you. And in order to do that, you must have a strategy that makes money over time, a good risk management plan, and you must stay disciplined to those things. Now, in order to stay disciplined to those, They work hand in hand. Staying disciplined gets a lot easier when you have a good risk management plan. Staying disciplined is much easier when you've back tested the strategy and you've seen that it makes profit in historic data. Staying disciplined is almost inevitable once you have those two things combined. If you have a money-making strategy that you've proven in historic data and created a portfolio of pairs that work awesome with that strategy, if you have a solid risk management plan that keeps you out of your emotions, then staying disciplined, it's so much easier. And that's the only way I've ever been able to stay disciplined, is by going through, doing the work, doing the back testing. So this, again, is what I call the triangle of trading success. If you are having trouble in your trading, and the top 3 signs of any trader that will fail, if I, after 10 years or more than 10 years now of trading, was making a mistake in one of these areas, I would not be profitable. If anyone, any trader out there has a mistake in one of these 3 areas, these are the top 3 signs that a trader will fail. A strategy that doesn't make money or they can't stick to. A risk management plan that's not good for their personality and causes them to get emotional and to, even worse, blow their entire account. Or if they can't stay disciplined to those 2 things, they inevitably will fail at a trader. And I don't want to see you do that. So take this video, use the information in it as you will, hopefully for good, not evil. And what I mean by that is you go out there and actually take these steps and put in the work to accomplish all 3 of these things, a mastery level in all 3 of these. And with that said, this video is already like 18 minutes long. I'm gonna let you guys go. If you enjoyed it, click that like button. Make sure you're subscribed by clicking the red button down below the video that says subscribe. If you're interested in some more advanced training, we do have some space in the EAP Training Program. It will be listed below. In that program, I share all the strategies, technical strategies that I use every day. And each of them, by the way, is based on CEST. I share all of my back testing and how I do it. I'm not going to take the time to write that out. I share pretty much everything that I've learned in the past decade of my own trading career in the course that you get with the EAP Training Program. I also send out 3 to 5 trade alerts per week. I have a video every week called the Best Setups video, where I'm showing you the areas I'm going to take trades from based on the strategies you're learning in the course. And it also comes with priority email where you can message me at any time. It is a mentor program. So any questions you have about trading, it will be me answering you personally. And best of all, it comes with a 60-day money-back guarantee. So at this point, it's a risk-free offer. If you have any reason at all before 60 days to say you don't think it gave you value, then I don't want to have any of your money. If it didn't create a better trader out of you than you started the program as, then I do not want any of your money whatsoever. You can email my support staff and we'll get you refunded ASAP if that is the case, but I doubt it will be, so definitely check that out. It's the top link in the description labeled EAP. Once again, if you do not want to do that, it's totally fine. By the way, you can learn how to trade for free. You don't need a course. I have enough information just on my own YouTube channel to help someone learn how to become a consistently profitable trader. It's just not laid out in a very organized format, which is kind of what you get for paying for any course. You may have already realized that, may not have. Just wanted to let you know. So if you don't want the course, no problem. Keep it locked here by subscribing, and I will see you in the next video. Talk soon.